for this CIO conference that has been organized by VS Partners and Financial Times in Chinese. Very welcome to all of our live audiences today. We kick off this program with a very pertinent and important topic with a distinguished panelist that's going to join me very soon. We're going to be talking about the small and medium-sized businesses, the micro businesses even in China. In nearly 30 years that I've been working in China, one of the things that I've seen time and again is the rise and then eventual fall of many small and micro businesses in China. Very easy to start, much easier to fail. Nonetheless, even in our industrial segment, we have thousands and thousands of competitors in the bottom of the pyramid, only to make maybe a couple of hundred to the middle and only a handful to the top of the pyramid. So supporting these businesses has been a lifelong challenge in the past 40 years of opening of China. With me today is a very distinguished leader in the financial industry in China. Charles Li joins us from Hong Kong. Charles, good afternoon and welcome to this program.
Thank you, Shane.
Charles is well known to most people, but the highlight of his career, starting from journalism and working as a lawyer, and then of course as in a law firm, and then later as a banker. But most importantly, he was formerly the CEO of the Hong Kong Stock Exchange and was the innovator behind a lot of the technological innovation and the platforms created by the Hong Kong Stock Exchange, like Stock Connect, etc. And now Charles has embarked upon probably a much greater challenge than even running the Hong Kong Stock Exchange, in my view, and that is MicroConnect. I'll let Charles talk about it. Charles, tell us what is the genesis of MicroConnect, and how did you come about to create that, and what is the philosophy behind it?
Thank you, Shane. Thank you for having me. Essentially, it's a very simple proposition. We're trying to connect global capital, which in many ways, have run out of yield on a global scale, given where monetary policies are. But on the other hand, in China, the small and the medium, but actually the M here in my universe is really micro. That is even smaller than small enterprises, are vibrant in China. They are where the growth are. That's where the employment are. That's where the GDP contributions and tax receipts are. It is also a high-risk sector, but it's very high returns as well, when they do succeed. So you have this global capital without a yield and great sector that contribute tremendous growth, but without any adequate capital financing. That dilemma is something that I wanted to find a way to see whether we can, overcome. And I think time has finally come, not because we come up with something necessarily originally innovative. It is really digitalization in China, the cashless society in China today that has made this all possible. Essentially, I was looking at this proposition and problem by essentially looking back at where retail, used to be 20 years ago, maybe 10 years ago. When, in the industrial age, when you shop, you go to Walmart, you go to a big department store where they can store 10,000 items in there and you do your merchandise and do your shopping. But today, Taobao, Amazon have millions of items on the digital platform, and you can shop online and to be able to still achieve everything that you wanted to achieve. I think the parallel is very similar. It's really digitalization that has allowed all of this to happen. So why not trying to figure out what we can do to potentially replicate that success. So we look at the financial services. Shane, I think you want to ask a question. I don't want to be doing a monologue. I want this to be a conversation. So that so why don't you proceed with the question, right? Because I saw you wanting to ask a question.
Yeah, no problem. I think this is really exciting, and I agree with you that there's a whole untapped capital that in this sector. And as you said, also there's a lot of capital that has very low returns, and they're not really having access to this sector. Tell us how. I have a couple of questions. Of course, to your point, digitization or a prolific digitization in China allows for technologically to reach this group more than, for example, Egypt or India or many other countries in the world. But how are you going to be able to connect, though, not technically speaking, but how are you going to connect the global capital to these micro businesses in China, and how will they be able to distinguish what businesses are going to give them reasonable alpha? Because we do know that a lot of these micro businesses come in and go and wash out. How will the investors, how will the capital be able to properly allocate?
Yeah, I think what we need to do is to essentially look at how investment has happened before. I mean, today, we have 10,000 listed companies on a global scale, and but we have millions of little guys in China that could ultimately access to capital. But the reason we have this department store system is because the information integrity, the disclosure requires sufficient professional and underwriters and regulators to back up the integrity. So most of the Wall Street functions in one way or another is about providing a body of information so that investors are able to make informed decisions in what they are investing, which by definition means that only those who can afford to pay for the cost of that big middleman is able to access to capital. So today, we essentially look at China as almost like Middle Eastern Israeli agriculture. All the plants are digitally connected like plastic tubes. So water is being able to be precisionally, diverted to the plant directly. So how can we potentially convert that ability into financeable, businesses? So the idea here is that, we have tried, so we have to find the right product. We have to find the right way to get the customers to get into the little guys. Mm-hmm. We have to find ways to collect the returns of the little guys. And we have to be able to find a way to properly price discovery what we have invested, and to be able to continue to inform the in future investment positions. So These are tiered of questions that we need to really tackle one by one. So if you could allow me to quickly look at the product first.
Yes.
And over the last decade, we have tried everything with internet financing, supply financing, P2P financing in China. They all failed reasonably spectacularly. I think the one thing that really defined all of them is the product of credit. Credit as a product is the wrong product for the little guys. It's the wrong product for the little guy themselves because the little guys' risk are too diverse and too vulnerable for them to be able to take the rigid principal and interest payment structure of credit product. But much more importantly, it's the wrong product for the people who provide the credit, because many of the little guys do very well when they succeed, but quite a few of them will die prematurely. But the upside of the success have nothing to do with the private and credit providers, but the downside is on your book. So I think it is that particular nature that is a mismatch between risk and reward. So what we are doing is really investment. It's almost like an equity. However, you cannot do traditional equity either. for the little investment that we are putting into each individual shops here, just registering your shareholder interest is going to be administratively cost prohibitive for you not to be able to do that. So our product here is, in essence, equity, but in execution and form is the revenue participation contract, meaning that we predetermine an earnings level of a little guy because we're investing through systems of franchisors and other control enterprises, which we call connect and collect partners, CC partners. And we are able to determine a particular sector, a particular type of business has a particular net margin, and we are essentially translate the entitlement to dividend of that net margin into a percentage of a revenue. And so that in terms of the actual legal relationship of the investor and the investee is simply a commercial contract to participate in the distribution of a revenue percentage. That's the essence is shareholder.
Okay.
But execution-wise, it's easy to execute contract.
All right, I get that. So couple of questions here. Maybe you could discuss this. One is, what innovations are you using in order to be able to execute that? Because it's not an easy thing to get to that revenue shareholding and revenue share and so on and so forth. And the second piece is, what industries or sectors are you focusing on? Is this a generic platform where anybody and everybody can come in? Or are you using some sort of a qualification or a filter in certain industries that allows you to actually address and get to know these micro businesses a little bit, pre-qualify them so that the die-out rate is more contained and acceptable?
Yes, thank you for that. And that essentially is the second question. How do we structure this product? How do we execute the collection? So essentially, we are investing only in the digitally controlled, the little guys whose revenue is already having to go through a control enterprises.
Makes sense.
Essentially what we call a connect and collect partners. Examples of those connect and collect partners are big platform companies. Meituan would be the best example.
Sure.
But they're not necessarily the best partner to do this first, because they are very big and we're just beginning. Franchisors, huge franchises, almost all franchise, essentially we are investing in the franchisee, but the franchisee's revenue or other financial key parameters need to be controlled by the franchisor. So we are reaching the little guys, the franchisees, through the franchisor. And the franchisor is the one that executes every single day on the revenue collection.
I see.
So put this into an example. We go to a from an industry, answer that question first. This is all going to be largely retail, services, and food and beverages, and restaurants, pharmacies, convenience stores, mechanic shops, barber shops, spas, dentist, and anything that you can organize a large number of franchisees, and also any businesses where the entrepreneur working in that little shop makes the most value, of that little enterprise. It is those little investee franchisees that we invest. But how do we reach them? Because they are in the tens of thousands, hundreds of thousands.
Exactly.
So we work with the franchisors first. So we look at the franchisors, we look at the different sector, we select the franchisors, and then we look at their shop opening procedures and processes. And if we feel comfortable with them, then we are basically allocating money to them and then giving them a specified product for them to push to the franchisees.
So you're actually pre-qualifying these micro businesses through your selection process. One pre-qualification is that they have to be CNC connected and be able to collect. They have to be digitally connected. And two is that you actually use some sort of a criteria, a selection criteria, to select the best performing or the less risky enterprises, or more transparent enterprises for that matter.
Yes, but we can only select with the best information that we can. But the most important part of us is a continued allocation. So, we start with, let's say 20 franchisors, and then we look at what we wanted to do with each one of them. We look at how much we think we should allocate to each one of them. So we do the initial allocation. We give A 5 million, we give B 6 million, we give C 7 million. Exactly. And then we tell them that you can, each go out, because the typical size of our investment is about 500,000 yuan. So we basically say, you can do 15 shops, B can do 30 shops, and C can do 25 shops. Then they will basically go to the franchisees, and when the franchisees decided to take our financing as their preferred financing, 3-week contract is executed. So money get invested in the new shop. We are not investing in existing franchisees. We're investing in new shops that of a franchisee who has already have one shop successfully executed and successful operating. So we're funding hopefully the second shop and third and fifth shop. We think the little guys, typically the sweet spot, opening up one shop for the little guy is usually a waste of their talent. 3 or 5 is the sweet spot with their family support in the same location, and they are able to really take care of 5 stores with the most optimal returns, and they can really, help the family to really, earn a very decent, respectable living. Giving them 10 stores is too much. They couldn't handle it. So we are really, really funding that second to
sweet spot.
Yeah, exactly.
So let me ask a couple questions. One is, I guess this might really be a great song to the ears of the central government and the policies and the directions that the government wants to go in terms of support of these micro businesses. Do you feel that this is aligned with the government's direction, and how do you think you can get support in that area in launching this platform?
Yeah, I mean, we didn't start this to fit into the official agenda. Obviously, we started early in the year, and the idea concept was developed even earlier. But it did very nicely fit into the current political agenda and the philosophy, because we are helping the little guy who actually put work and create value for his family, for his community, and is actually doing it at the most distributed level. But we're doing it is also because they bring the best returns. Because for every investment we're making, this whole thing is about allocation. Go back to the theory I talked about it. So we will, once they're funded, every little guy's cash flow that I'm receiving every day, because just go back quickly on how the execution works. The CC partners, the franchisors, every day will collect our returns on that revenue. So let's put this into a product, if it's possible, if I have the time. You and I want to open a shop, and you're the franchisor at C, and I, Michael Connect. Usually take $1 million renminbi to set up a new shop, and then we decide you put 300,000, I put 700,000, and that's really the investment of the new shop. As soon as the new shop is operational, we basically say this is the business with the 30% margin, and then let's say every day has an X dollar fixed cost. So any cash flow every day above X, for that $100, $30 is distributable as earnings. So I get $21, the little guy get $9, and the business has 70. But as soon as we recover that million investment, he got his 300,000 back. I got my 700,000 back. Then we flip. Then he becomes a 70% owner, and I become a 30% owner, and we continue to execute that split every day.
And that ownership split is perpetual then?
It's
after this?
perpetual. It's
So
perpetual.
with this, I know that you don't have a crystal ball, but and maybe modeling it is very difficult. But what kind of returns do you think the investors on MicroConnect are going to be able to expect from China's micro industry, which until now has been basically unknown to them?
Yeah, it's completely unknown, and it's also the number in the future could be in the millions and tens of millions. And we're going to obviously start with the hundred, the thousands, and 10,000. So at least the number that we have, the CC partners that we are working with, the underlying businesses that we are able to invest and put on investment returns on our own investment is a very solid 15 to 20 without even any kind of a structuring at all. We essentially look at the businesses and look at two numbers. One is how long does it take for them to return the capital, and second is how long typically they can live on, and typically very trendy restaurants, can bring your capital back within 12 months, sometime 10 months, but they have an average life of 3 years. And the little hotels, bring your money back in about 3 years, but they live on for about 12 years. So it is the consortium, it is the portfolio that we're going to construct that in aggregate is going to give us extraordinarily, attractive Sharpe ratios, because the risks are totally uncorrelated and the returns are going to become highly, of extremely high quality. And then what we do is the allocation. And then, the first round, if we like what A is doing, so we are a store picker. We're not a stock picker. Because,
it's fascinating. It's fascinating.
Yeah,
so you're basically a portfolio picker at the micro level. And
correct.
So Charles, I'm excited. I think that this is really exciting for on many fronts. It's exciting for China's the micro and small businesses in all of the different parts of China. It's exciting for the world to be able to participate. Obviously, you're going to have your hands full to try to introduce this new sector, because already China is an opaque place and it's very difficult. But I think that it is very innovative, and I think that it is an offering that will inevitably, if done well, which I'm sure under your leadership will be, could be very lucrative. When can we expect to be able to micro-connect to China?
Well, we by Chinese New Year, we hope to deploy the first 100 investment. And then next year, we want to go into the thousands. And 2023, we will begin to reach into the tens of thousands. So that's really the 1,000,000 and then the 100 and thousands and 10,000 plan. But the key here is every investment we make, we will list them, so to speak, onto the new exchange, the MicroConnect exchange, so that every day we will know restaurant on 27th Street, pizza shop is bringing $700 back today, is bringing $900 back tomorrow, is bringing $600 today. So that number every day give us two things back. An incremental capital back, which can deploy them again quickly. So efficiency of capital is very high. Two, then we will know what's going on with that little shop. So the next round of allocation, we're going to say we're going to give McDonald's more, Pizza Hut less, and Kentucky Fried Chicken a little bit more. And later on, we will learn for McDonald's, those shops inside the mall looks better, do better than those outside the mall. And on Pizza Hut, those on the highway is more attractive. So the next round of allocation, we're going to say, please put more into the mall McDonald's and more into the highway pizzas. So that's sort of a learning. AI learning is the one that allows to continue to optimize that allocation.
Thank you, Charles. Fascinating. And I think that last point you made about the AI and analytics and the data that you're going to collect, this is going to be a tremendous platform. I know that we could have gone on for a much longer period of time. I know that our audience and everybody is going to be looking with great anticipation to this new innovation. Charles Lee, thank you for joining me from Hong Kong today in this first kickoff of the VS Partners and Financial Times CIO Symposium. A very, very exciting new thing coming right around the corner at the Chinese New Year. And a journey of 1,000 miles or 10,000 miles starts with the first step, and you're taking that first step.
Thank you very much.
Thank you, everyone. And we'll end this part of the program at this point, and I'll pass it on for the next step, next stage of the program for today's symposium. Thank you.
Thank you.